Have you ever wondered about the difference between the stock market and cryptocurrency? Welcome to the fascinating world of finance, a realm that goes beyond mere currency. It's a universe where investments take center stage, where stocks and cryptocurrencies are the stars. These two financial instruments are more than just buzzwords. They're vehicles that can help you grow your wealth, but only if you understand their inner workings. The stock market, with its shares and dividends, is a long-standing pillar of the financial world. Cryptocurrency, on the other hand, is a relatively new player, a digital asset that has taken the world by storm with its potential for high returns. Grasping the difference between these two can significantly impact your investment decisions. In the next few minutes, we'll delve into the basics of the stock market and cryptocurrency. So, buckle up for an exciting journey into the heart of finance. So, what exactly is the stock market? Well, think of it as a colossal global marketplace, but instead of buying vegetables or vintage vinyl records, people are buying and selling pieces of companies. These pieces are often referred to as shares or stocks. When you buy a share, you're essentially buying a tiny slice of that company, making you a part owner or a shareholder. Now, why would companies want to sell parts of themselves? The answer is simple: to raise money. When companies need funds for expansion or to pay off debts, they might decide to go public. This means they're listing their shares on the stock market, opening them up for anyone to purchase. This process is known as an initial public offering, or IPO. On the flip side, we have investors. These are individuals or institutions that buy these shares with the hope that the company will grow and become more profitable. If that happens, the price of the shares they own will increase and they can sell them for a profit. This is called capital gains. But here's the thing: the stock market isn't just about buying low and selling high. Some companies regularly share a portion of their profits with their shareholders. These payments are known as dividends. So, as a shareholder, you could potentially earn money from dividends, as well as from selling your shares at a higher price. However, the stock market is influenced by numerous factors, from economic conditions and political events to company performance and investor sentiment. All of these can cause share prices to rise or fall. This is what makes the stock market dynamic, exciting, and yes, a bit risky. That's the stock market for you. Now let's dive into the world of cryptocurrency. Cryptocurrency might seem like a complex term, but it's not as complicated as you might think. At its core, cryptocurrency is a type of digital or virtual currency that uses cryptography for security. Unlike traditional currencies issued by central banks, cryptocurrencies are decentralized and operate on a technology called blockchain. Picture a blockchain as a digital ledger of transactions spread across multiple computers, where each transaction is recorded in a block and these blocks are linked to each other in a chain. Now you might wonder, how are these cryptocurrencies created? That's where mining comes in. Mining is a process where powerful computers perform complex calculations to add transactions to the blockchain. As a reward for this work, miners earn new units of cryptocurrency. Bitcoin, for instance, was the first cryptocurrency, and it's created through this mining process. But what gives cryptocurrency its value? It's not backed by a physical commodity like gold or a government's promise. Instead, the value of a cryptocurrency is largely determined by supply and demand. When demand for a particular cryptocurrency increases, so does its price. Conversely, when demand falls, the price drops. This is similar to how the price of a stock or a commodity like oil can go up or down based on market demand. One key aspect of cryptocurrencies is their limited supply. For example, the total number of bitcoins that will ever exist is capped at 21 million. This scarcity can contribute to the value of a cryptocurrency, similar to how scarcity can increase the value of gold or diamonds. Cryptocurrencies also offer a degree of anonymity. While transactions are recorded on the blockchain, the identities of the people making those transactions can remain hidden. This has drawn both acclaim for protecting privacy and criticism for facilitating illegal activities. Now that we've covered the basics of cryptocurrency, let's look at how these two financial platforms differ. Stock market and cryptocurrency might both be investment platforms, but they have some key differences. As we dive into this comparison, let's keep in mind that both of these financial arenas can be lucrative, but they also come with their own unique risks and rewards. First off, let's talk about their nature. The stock market is a physical entity. It's a literal marketplace where shares of public companies are bought and sold. Cryptocurrency, on the other hand, is a digital asset. Think of it as virtual money that exists solely in the digital realm, It's a bit like owning a piece of a virtual universe. Next, we have regulation. The stock market is highly regulated. There are governing bodies like the Securities and Exchange Commission in the United States, which ensure fair trading practices. Cryptocurrencies, however, are largely unregulated. This lack of oversight can lead to more risks, but also more opportunities for high returns. Now let's consider trading hours. The stock market operates on business days during set hours. In contrast, the cryptocurrency market never sleeps. It's a 24 hours a day, 7 days a week affair. This means you can trade cryptocurrencies anytime, from anywhere. Then there's volatility. Stocks can be volatile, especially during economic downturns, but cryptocurrencies take volatility to a whole new level. Cryptocurrency prices can fluctuate wildly within a single day, making them a high-risk, high-reward investment. Think of riding a roller coaster, but with your money. Lastly, we have entry requirements. To invest in the stock market, you typically need a sizable amount of capital. Some blue-chip stocks can cost hundreds, even thousands of dollars per share. Cryptocurrencies, however, often allow you to buy fractions of a single unit. This means you can start investing in cryptocurrencies with a much smaller initial investment. To sum it all up, the stock market is a more traditional, regulated, and stable investment platform. It's like a well-established tree with deep roots. Cryptocurrencies, on the other hand, are like a young sapling. They're new, exciting, and full of potential, but also relatively unstable and unpredictable. Choosing between these two investment platforms depends on your financial goals, risk tolerance, and investment horizon. If you're looking for stability and are willing to wait for your investments to grow over time, the stock market might be your cup of tea. But if you're comfortable with risk and are interested in potentially fast high returns, cryptocurrencies might be worth exploring. Understanding these differences can help you decide where to invest your money. Remember, informed decisions are the best decisions, so keep learning, stay curious, and make your money work for you. We've covered a lot today, so let's quickly recap. We've journeyed together through the intriguing world of finance, exploring both the stock market and the realm of cryptocurrency. We've peeled back the layers of these two financial behemoths, understanding their complexities and appreciating their potential. In our exploration of the stock market, we delved into the mechanism of buying and selling shares of publicly traded companies, and how these transactions have a profound impact on the global economy. We unraveled the concept of market capitalization, and understood how the stock market can be a platform for growth, providing opportunities for both companies and investors alike. Then we ventured into the fascinating world of cryptocurrency. We demystified the concept of digital currencies that use cryptography for security. We learned about the decentralized control as opposed to centralized digital currency and central banking systems. We dissected the idea of blockchain, the technology that underpins cryptocurrencies, and how it offers transparency and security. And finally, we engaged in a head-to-head analysis of the stock market and cryptocurrency, highlighting the key differences and similarities. We talked about the risk and reward inherent in both, the influence of global events, and how technological advancements are shaping these financial landscapes. Remember, understanding these basics is absolutely crucial before you make any investment decisions. It's about being informed, about knowing the risks and potential rewards, about being smart with your money. So, whether you're leaning towards the traditional path of the stock market or the more contemporary and somewhat uncharted territory of cryptocurrency, make sure you're armed with knowledge. In conclusion, the world of finance is vast and diverse, offering a plethora of avenues for investment. Whether it's the stock market or cryptocurrency, each has its own allure and potential pitfalls. But with understanding and careful decision-making, they can be powerful tools in your financial journey. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.